Our analysis begins with price history from 1803. In 1865, silver spiked briefly to $2.94. We regard this as the peak of Wave 1. In 1932, after bottoming in Wave 2 at 28 cents, silver rallied in a 5-wave impulse pattern we view as Wave 3 that peaked at $48 in 1980. This impulse pattern is clearer when viewed in logarithmic scale. From 1980 to 2002, silver declined and consolidated in a contracting triangle pattern. Triangles exist only as fourth waves of impulsive patterns or as B waves of corrective patterns. The presence of a triangle here serves to confirm that the preceding rally was indeed Wave 3. The triangle signals a pressurized market psychology and culminates in a price thrust continuation in the direction of the prevailing trend. The minimum distance of the thrust is estimated by drawing trend lines through points A and C and then through points B and D of the triangle that extend backward to the moment where Wave A began. The measurement of the distance between the two crossings on that vertical typically foretells either 1. The total rough distance of the final thrust, or 2. 78.6% of it. The Fibonacci scale overlay here shows that the thrust measurement was indeed very close to 78.6% of the total upward thrust of Wave 5 to $49.83 in 2011, as would typically be expected. Wave 5 appears to have peaked in 2011 at $49.83, followed by a significant retracement so far of very nearly 78.6% of the entire rise from the 1800s. The end of Wave 5 marked the completion of Wave 1 of the next higher degree. Therefore, silver is now correcting in Wave 2 of the next higher degree. In order to determine what the silver price may likely do next, we need to closely examine the wave structure of the decline thus far and consider certain wave principle guidelines concerning second wave corrections. Firstly, we will zoom in on the structure of the decline to $11.64 in March 2020. After a sharp drop to $33.11 on May 2, 2011, which we view as a minor wave A contracting triangle wave B developed through October 1, 2012, ending at $35.40. The triangle thrust measurement implied a decline of at least $21.80, suggesting a wave C downside target of perhaps $13.60 or lower. Silver then sharply declined and then bounced sideways just above that target, which became clear upside support downside resistance, reaching $13.65 in December 2015, and finally piercing down through it to $11.64 in March 2020. The corrective 535 pattern labeled Wave A is called a zigzag. Second waves are usually zigzag structures, and this particular one has retraced more than enough of the preceding Wave 1 to qualify as a completed Wave 2 by virtue of these facts alone. However, there are still two guiding criteria that have not been met. 1. Corrections typically retrace to the area of the end of the fourth wave of lesser degree. In this case, that area is around $4.26. 2. A second wave typically takes a minimum of 10% of the time that the first wave took to complete. Given that the first wave of the degree being analyzed here took over 218 years, a duration of at least 21.8 years, or no earlier than 2033, would be expected for Wave 2. These unmet guidelines prompt us to view this Wave 2 as about halfway done, which, if so, means that an intervening Wave B and final Wave C will most likely occur before Wave 2 is done. As wave A was a zigzag, it mandates that the overall ABC structure of wave 2 will unfold in the 3-3-5 form of a flat. We believe the rally that started in 2020 is the developing wave B of wave 2. It appears to be a zigzag with a 5-3-5 structure that is now consolidating in its own minor wave B midway through its development. It remains to be seen whether the B coiling since August 2020 will be done in 3 waves or further develop into a triangle before we see the rise of a C wave that completes wave B of 2. The notion of a flat correction is that wave B tends to reach near to the starting point of wave A, even sometimes exceeding it in what is called a running flat. If we fabricate a premature triangle for B of 2, based on potentially relevant existing angles, a thrust estimate could show an initial target for C of around $35.69, also just near 61.8% of wave A. Flat criteria also strongly suggests that wave B should retrace at least 70% of wave A. Based on this, wave C of B would need to end above $38.37. We'll monitor the situation and update our wave analysis as it unfolds.